learn to quieten your inner critic, because it's your own inner critic that's actually saying to you, you should know the answer to this.
Advice that you'd give daughter, niece, sister.
It is all about that compound interest, and it is all about getting that small amount of money invested early, and it grows over time.
Hello and welcome to Super Insider, a podcast on all things superannuation, retirement, investing in the economy. My name is Anne. It's so awesome to be your host, and we today are all about the sisterhood. International Women's Day, it's a thing, and we have the pinnacle of our investment team who are the most amazing women. They have the most amazing stories, and you are going to absolutely love this episode because you're going to hear about how you get to be a big boss in an investment team and how you can have financial confidence yourself in your own life. So before we get into it and I introduce these amazing women, I just want to remind you, of course, and you know this, general advice, general information only. People, you need to make sure whether this is right for you. Okay. Liz Kumaru is in the fabulous green dress and Jody Fitzgerald is in the fabulous black dress. Welcome to the studio.
Thank you.
Thank you.
Liz, it's all things kind of growthy assets, and Jody is all things defensive and liquidity. And together, that's a beautiful, harmonious kind of component of our portfolio. Just give us the very short cliff note. Humble beginnings to big global investors. Liz, I'm going to go to you first. Tell us.
Yeah, how did I get interested in investments? Well, my father was very active with his superannuation fund. And so when I was a teenager, I used to sit down with him and go through all his financial advisors with him, their advice and what he was investing in. And so that really piqued my interest in investments. And I was super lucky. I got the opportunity when I was 15 to do work experience at his financial advisor's office.
Oh, there you go.
And I did. I went in there every day for the holidays, and I was spent the whole time filing in the back office. But to get to that filing cabinet, I had to walk past the trading desk. And that was where there was excitement and trading. And that was enough for me to really say, this is the space I want to be in. So that's where it all started.
Okay. And what about you, Jody?
I probably have quite a different background to most people that land in financial services.
tell.
So I'm from a small coal mining town, very working class family. There was, a lot of people in financial services, either, their parents were interested or involved or so forth. There were no discussions about investments around our dinner table. I liked maths. I was good at maths. And I liked economics. So what most people do when they're young is they go, well, I'm good at that. I'll do something at uni. So I went off to uni and did a finance and economics degree. And I left and I still had no idea what I wanted to do. So I went into a large financial services firm that had different lines of businesses. And I actually started out as an actuarial analyst, which is really
dull.
Lots of maths.
Actuaries who are listening.
But I'm also giving away my age because this was back in the day where superannuation was mainly defined benefit. But the way I got interested in it was through the actuarial work where we were determining what the shortfall was in the superannuation. We'd work with the investment team to understand how to fill that gap. And I was just like, well, that's way more interesting than what I'm doing over here. So that was kind of then the start of my journey of, and I think a life lesson of when you find something that interests you, just find someone to pay you to do it.
So what does investing mean when we're talking about super? What is it?
We can think about this from two angles. The first angle being the individual, so the member. So if you've made a decision to have your superannuation with a fund like ART, investing for you means about aligning your choices and preferences. So the decisions you need to make is what investment option is right for me for the stage of life that I'm in, how much risk am I willing to take to earn returns over time, and how active do I want to engage with my investments. So when you think about as an individual investing from that perspective, it makes it a lot more approachable. Once you've made those decisions, the heavy lifting's then done by the fund. So for people like myself and Liz and the investment team that we have here at ART, for us investing from a superannuation perspective is about stewardship. It's about us taking stewardship of that money or your retirement savings that you're entrusting with us. And then what we're doing is every year we're making hundreds, if not thousands, of complex decisions with regards to, is that a good asset? What's it worth? What's the risks we should be taking? How do we diversify those investments?
How do we manage liquidity?
How do we manage liquidity? How do we protect the portfolio in a market crisis? We think about the portfolio in terms of economic cycles and decades, not in terms of trends that your Uber driver might be talking about.
Okay, and the girl from the coal town who's now, in the big smoke, there's a lot more diversity, but it's still very male dominated. What do you love about the current construct, and what kind of great, Sonia?
So if you go back sort of 20 plus years, there were not a lot of women. So it was just, you had to have a thick skin. You had to, I've got some stories, and I think for women and the
Stories
generation,
of things you've had to cop.
yeah, it's
basically.
like some of the stuff I had to sort of put up with, and you can see why you probably lost a lot of women, during that phase. I genuinely believe things have changed quite significantly from over the decades, because businesses now understand the importance of diversity, be it that gender diversity or diversity on all levels, that you get better investment decision making if you've got different views and opinions and different life experiences. So I think it's a lot easier to be a woman in financial services now than it was probably when both of us were starting out. There's still some things though, there's still some challenges. For me, what I find really interesting is men and women just communicate differently. And have you ever been in the room, and I'm sure you have, where you'll be in a meeting and you'll say something and it kind of hasn't been heard. And then a man will say the exact same thing and everyone goes, oh yeah, great idea. And you're like, I literally just said that. Literally just said that. And there's actually a whole bunch of research on this, that the amount of words women use compared to men, it's almost double. So when we say something, we use a lot more joining words and so forth. There still is some of those challenges of being heard, and it's not that people are deliberately not trying to hear you, but that communication difference between men and women is impactful in certain environments.
I love that. And the unconscious bias probably around who you're listening to. I've had that happen to me so many times.
We all would.
I've actually just starting to call people on it. Then they feel so bad because they don't mean to do it.
Yeah, no, it's not intentional, but it's just it is a challenge to get heard. Yeah.
Elizabeth.
I feel like I've had a really, really fortunate career. I haven't had too many of those experiences, but I actually think some of the biggest challenges have been my own personal roadblocks. So in terms of in environments, and it's a female thing, I certainly am like every other female, I think, fear of failure, fear of saying something silly, asking stupid questions. So in a big room, I would actually be more hesitant to speak up in case it was stupid. Now, the older you get, the more you realise that there is actually no stupid question, and even the most simplest question comes with some really interesting insight. However, I think
I care less to what people think about you.
You care less the older you get, definitely. But I think I learnt to manage it very early on, and I've been really lucky to have some really close mentors, some really amazing males that I've worked for and worked with, and I use them as a coach guide, tested ideas before I go in rooms, such that I have that voice, such that if I say it and people don't listen, they'll step in and really be that support and reinforcement for me. And you need that advocate in order to proceed and do well in a career.
Okay, and so confidence, we have done so much research over the years about the confidence gap, which is always sort of 10 points difference between men and women when it comes to confidence about investing, confidence about making decisions on their super. It's just consistent. It's very, very, very set. And so you're talking about your own sort of confidence levels. So women tell us that it's really hard to invest. They lack confidence. But why is it? Advice that you'd give daughter, niece, sister, person at work around actually building confidence in yourself, but also confidence about investing and money. Who wants to start?
Yeah, I'm happy to kick off because I've been asked a similar question before to this around, and the question was framed to me in the light of, why do you think there aren't more female portfolio managers? Because statistically there's more men than women in the industry. And I think a lot of it comes back to that confidence concept, in that to be a good investor, you need to be comfortable in making decisions in uncertainty. You need to be able to make a decision where you don't know the answer. The challenge that women face, particularly early in their career, is that the men are sitting in the room, oh, you should buy it, this stock's going up. And the women are sitting there going, how do they know that? Because we assume they know the answer. They've just got the vibrato, right, of I'm confident this will go up. Whereas women, because we're not naturally wired to take risk, Like we're more naturally wired to sort of, protect and make thoughtful decisions and so forth. So when you're in a room full of men who are, oh, let's roll the dice, off we go, you have this assumption that they understand something that I don't. So my advice to women is they actually don't. They're just saying it confidently. So what women really need to do from an investment perspective and early in their careers is learn to quieten your inner critic. Because it's your own inner critic that's actually saying to you, you should know the answer to this. Or to your point, oh, that's going to be a stupid question. Or you kind of you're constantly sort of thinking about it. When you actually look at the studies, though, of women who push through that and get comfortable with uncertainty and get comfortable with being able to voice an opinion without knowing what the real answer is, but you've got a thesis as to why you think this is what we should be doing. Female portfolio managers tend to do better than male portfolio managers. There's a lot of studies of it. And I genuinely believe that's because women take better calibrated risk, because we do think in risk terms more naturally. And therefore, once we get to that point, we take better calibrated risk decisions.
The psychological differences between men and women are well researched and well known. And many of our listeners, I'm sure they've heard, it's the case if there's a job available. Men, if they've got 6 out of the 10 criteria, will say, yeah, I'm suitable for that job, I'll go for it. Women need to tick all 10 of those criteria before they feel confident to apply. So that is a really well-known statistic, and it does go to that inner critic, that inner confidence, and to your point, that confidence gap. So unless women truly believe that they have all the answers, they won't make a decision. And that's incredibly difficult in investments, because even the best, most experienced investor does not have all the answers, because things are constantly changing. And even the best investors around the world have made mistakes and have lost money. So it is about being educated and understanding that. And I think it really is about speaking to people that you respect and working with people that you admire greatly so that you improve over time. And it gives you the opportunity to learn, leverage, kick around ideas with them, which will build that confidence over time. And that mentor, I think it is really important to work with amazing people to help you grow and create the best outcomes. So the advice would be education and seeking out people that are better than you and hanging out with people that are better than you.
Yeah. And are you the metaphorical smoking cardiologist in terms of your own kind of like, do you actually pay attention to your own superannuation? Because we talk about, make sure you download the app, make sure your voluntary contributions, like Jody's like, yeah.
Yeah, 100%. Yep. And I think it's really important to get women interested in their finances, their own financial security early. And I've done that with my kids, right? So
you've got a couple of daughters?
I've got 2 girls, yeah. So when they were little, when I say little, sort of, early
teens?
When they were teenagers and early teens, I took them off to the bank and opened up 2 accounts for them. One was this is the account we'll put play money in, like I want to go and buy something at the shop money. And then this is the account.
Go buy something I don't need.
Yeah, basically. Because, it's going to happen.
Yeah.
And then this account is your savings account, and try to introduce them to the idea of compound interest, because my favourite mathematical formula in the world. And it was really interesting watching them. So I've got one kid who gets money and just spends it automatically, and I've got another one who saves. The one who saves early on was looking at the account going, Mum, because she got to put all of her birthday money in it, there's an extra $5 in there that I didn't put in there. I went, oh, sweetie, that's interest. And away we go. So just from early on, I think as a parent, that responsibility of trying to get women, girls in particular, to be thinking about budgeting, saving their own finances is really important. So yeah, I've always done it. Yeah.
And what about you, Liz?
Every investment decision we make has an impact on our own superannuation. So the answer is yes, but just for time and focus and conflicts of interest, we have limited investments outside of super apart from index funds. And that is purely because of the conflicts and I'm focusing my entire time in terms of the energy in relation to the investments that we make on behalf of ART members. And we are beneficiaries of that because all my family are ART members. in terms of my children, you're amazing. I wasn't that structured.
Because you've got two boys and a girl, yes?
I do.
Yes.
I do. And yes, the two boys are incredibly disciplined. Every piece they have their apps and invest a small amount. And it is all about that compound earning. Yeah. And it is all about getting that small amount of money invested early, and it grows over time. And if you put that small amount in early, you don't really miss it. I know there is a cost of living crisis and it is hard, but every small amount matters. And that compound earning means that you're earning on top of interest. So it's actually earning more than what you ever put in there. And by the time you get to a retirement age, it does make an enormous difference. Yeah. So the boys are excellent. My youngest is 18 and she hasn't got a regular income yet, so she hasn't set it up. But I expect that she is very budget focused.
Good on her.
Yes.
So 25% gap between our members. We represent 2.4 million members, and we are Australia. Like, you know, we have the diversity of the geography, public sector, private sector, big business, small business, ASX companies, family run. Like, if art has this problem, Australia has this problem, and it's the 25% gap. What's your view around how this gap gets closed for our members so that when your girls grow up, it's not so wide?
Yeah. I mean, there's some big issues at play there, right? In the sense of pay equality, you know, a whole bunch of social issues that need to be thought about on a national stage. I think in terms of what you can do today as an individual, as a woman, is, to Liz's point, take advantage of the concept of compounding as soon as you can.
Very practical.
And if you can actually contribute just a little bit more, it doesn't need to be a lot, just a little bit more into your super every year, it has an impact. So if you were to say $5,000 a year, right? That could be accessible. It may not be for everybody, but just an amount that's probably reasonably accessible over the course of a year for people. If you could put that aside and just say it earned on average 8%. So it'll go up and down, but over the long term, it's 8% per annum if it compounds out at. That $5,000 in 10 years will be worth over $10,000. Mm. In 20 years, it'll be worth over $23,000. So that's your money making money for you. Mm. So I think that's a small thing women can do today to try to look forward in terms of their retirement.
So you just said $5,000 becomes $23,000.
Did over. If I've done the maths right in
my head.
And
how many years did you just say?
20. If it earns 8% per annum.
And doing nothing.
Doing nothing.
Listening to Jody say that. $5,000 does sound like a lot of money, but when you hear that, that's a really compelling reason to save,
all you have to do is then not touch it. And if you put it in your super, you can't touch it. Mm. Right. So that's one of the advantages. And it's also a tax-friendly environment.
Very tax-friendly environment.
And so forth and so forth. So outside of those big national issues that we need to solve from a government perspective and from a societal perspective, I think as an individual, what you can do today to make your retirement a little bit more secure is think about, can I do any voluntary contributions? And it might seem like a little amount. As you might say, I can only put a couple of $100 in. It's not worth it. Well, it is, because it's going to compound. You've got a long time, assuming you're talking to someone who's got 20 years until retirement, let that money work for you for that 20-year period.
Yeah, I love it. And what about you, Liz?
Yeah, the only other thing, really well said, obviously there are many big issues that need to be resolved. There's not one. But one of the other things that people can do right now is actually educate themselves, because one of the challenges that women have are comfort investing in risky investments. Because, again, coming back to this psychological difference in gap, they look at the potential loss and that sounds super scary, and so they tend to more go into cash or more defensive options. So having an understanding of your risk appetite and the likely pathway and the holding period and the reduction of the likelihood of a big drawdown over longer time horizons would be another element to get comfortable with. So really think through, what risk are you taking? How long have you got to make that investment?
So in other words, you can close that gap or catch up or accelerate your balance if you have the capacity to take on some more risk.
Because to earn that 8%, to use that example, you're not going to get that in the conservative option. You have to have a higher risk option to be able to earn that on a per annum basis over a long period of time. But the time frame is important, because unfortunately with news and media, a crisis will happen, whether it be COVID or a GFC, and it's all over the news. And then people start panicking, going, oh my God, my super money's I'm losing money, and they'll switch at the wrong time, etc. But you need to remember, well, over 20 years, there's one thing that happens, that all crises come to an end and the market keeps going up.
You've got to say bar none. You've got to say bar none.
I'm channeling BP.
Brian, you're there. The universe, we can't escape you.
We love you.
Okay, so very practical tips from the top echelon of our investment team at ART as big global investors. So what I've heard from you is that if you are some young woman out there or in high school and you love just interested in investing and money, you just have to channel that energy and find that opportunity is the first thing I've heard. So there's a bit of hustle in there and just go for it. The second thing I've heard is around confidence. I've heard that you've got to teach the next generation.
100%.
And you can be really practical.
Simple.
Simple.
Start.
You just got to get started.
Yeah.
Doesn't have to be big.
Have I
Just
missed
get started.
anything in terms of the lessons?
Education. I would go back to education, and there's some really easy tools on the ART website just to learn what are the different options, understand what the different risk profiles are, because it is important that you need to sleep at night. To Jody's point, if you are a very risk-averse investor and you are close to retirement and you are invested in an option that's risky and there is a correction, because there will be market corrections, the last thing you want is to not be able to sleep at night because you're worried. One of the key lessons out of my life is really to always have clarity around what your objective is, because you honestly can't achieve what you don't know what you're looking for. So having that clear plan, clear objective so that you can ride out the ups and downs and know what you're expected over that time horizon is critically important.
Such an amazing conversation. I think the spirit of this place and the culture of this place is embodied by you two. So if you're listening to this, tell somebody young in your life that they need to get educated and that there's these inspiring role models, that the next generation of investors can look up to. Thanks for joining us again. So big news for the Super Insider community that we are now going to be dropping into your feed every second and last Thursday of the month. And next episode, the sandwich generation. No, I'm not talking about ham, cheese and tomato. I'm talking about you poor Gen Xers that have kids and parents, and how do you navigate all of the complexity of finances with that and still invest in your super. So that's going to be an amazing episode, and we'll see you there soon.